The Bitcoin stock to flow metric is definitely one of the more controversial models for forecasting future Bitcoin price action. It's now giving a Bitcoin fair valuation of over $400,000 in less than a year's time. So let's discuss whether we should still be using this chart or if maybe Bitcoin has now broken this model. Today we're going to be looking at whether the Bitcoin stock to flow model still works and where better to start than the Bitcoin stock to flow model indicator chart we have here on bitcoinmagazinepro.com. Now, if you weren't already aware, the Bitcoin stock to flow model is trying to give Bitcoin a fair valuation based on comparable assets such as gold and silver, and it's basing these valuations on its stock, which is its circulating supply, and its flow, which is its inflationary rate. Now, if we go down here a little bit, we see a little bit more information on exactly how this is calculated. And this metric, well, this model was first derived from Plan B. So if we go down here, we can actually see a little bit of credit to Plan B. And if you go onto this link, you can see much more articles and in-depth analysis from his own findings and how he actually created this metric. But if we scroll back up here, the most important thing we need to be looking at is if this model still works. Many people have been a little bit skeptical on the Bitcoin stock to flow model for a number of years now, but especially this cycle, I'm seeing a lot of people talking on social media, other content creators, maybe discrediting the stock to flow model as something that maybe historically worked, potentially by coincidence, but there's absolutely no chance it's going to work this cycle. However, we're not actually seeing any evidence that this is the case. If we just look here, we can actually see, judging by its divergence from the fair model valuation, which is this middle line here, which is currently predicting the Bitcoin price to be at about $80,000-ish, so we're pretty close. We can actually see this oscillator down here, if I just zoom in here. So we can see exactly how far we've diverged either to the upside or the downside from this metric. And we could see a few months ago, especially towards the Bitcoin bear cycle bottom when price was just around $15,000, we'd actually come significantly below this model valuation. But it wasn't anything we hadn't seen before. In fact, it was actually less than what we'd seen in previous cycles. If we just look to where we'd actually bottomed out here, we can see in previous cycles, we'd actually been considerably lower than this in terms of its divergence from this oscillator. One thing we do have to take into account is while in previous cycles, maybe we've had a predicted valuation model of $4,000 and we've reached $20,000. If we actually look at the peaks of this metric, we can see it's definitely moving to the downside. We're not seeing quite as exuberant moves to the upside where we see these exponential price rallies significantly above the model valuation. And as we can see, as we're just a couple months past the halving, we've actually seen this model be pretty much in line with where we were in previous cycles in terms of where we are in relation to this fair model valuation. If we just draw a line from where we currently are, or where we were at the Bitcoin halving, I should say, we can see in almost every single cycle, especially the previous two cycles, we were at pretty much the exact same point in terms of diverging from this fair model valuation. We can actually see in previous cycles, we've actually, after the halving event, diverged significantly beneath this once again. So where we are right now, it's hard to say that this model isn't going to come true, it isn't accurate, it isn't useful, because we are following it. And whether you believe in the stock to flow model valuation, the circulating supply, inflationary rate comparable to other hard assets, it's undeniable that a decreasing supply of new BTC entering the market with an even constant, never mind increasing demand for an asset, is just simple supply and demand economics, which is going to lead to higher prices. If we look at the miner revenue in terms of block rewards here, we can see the actual impact that this most recent halving has had, which has resulted in the Bitcoin stock to flow model massively increasing in terms of its model valuation. We've seen in the previous 4 years where Bitcoin block rewards every day in terms of BTC was somewhere around 900 Bitcoin. So about every 10 minutes, miners were receiving 6.25 BTC per block. Now it's 3.125 and miners are earning significantly less. Well, half of what they previously earned, as we can see happens predictably every 4 years at the time of the halving event. And if we go back here, what we can actually see is there's usually a little bit of almost a grace period where we don't see a halving and instantly Bitcoin's fair model valuation increases exponentially. We actually see about a year transitionary period. And this is because we don't immediately see miners maybe taking full advantage, retail maybe taking into account the new supply and demand economics. If we just go onto some of the other miner charts we have here on Look Into Bitcoin, we can actually see that if we go to the Bitcoin hash ribbons indicator, we can see we're still in a period of miner capitulation. We still haven't seen miners begin to turn on machines, mine new Bitcoin, new miners coming into operations, because maybe the economics of setting up a new operations, maybe existing operations, just aren't profitable anymore. If you imagine pretty much overnight your revenue decreasing by 50%, obviously it's going to be hard to continue operations, and it's maybe not as enticing to become a new Bitcoin miner. This is looking at the Bitcoin hash rate in terms of two moving averages, the 30-day, which is the light blue line, and the 60-day, which is the purpley line. And once the 30-day crosses beneath that 60-day, we get these red shaded areas, which indicate minor capitulation, which is very normal around a Bitcoin halving period. But once we cross back above, this is a hash ribbon buy signal, which, as you can probably immediately tell, has historically been one of Bitcoin's best performing signals. And like I said, the Bitcoin miners who are probably suffering a little bit due to a decrease in miner earnings, we can actually map this out looking at the Puel multiple. So we can see as at its lowest point, Bitcoin miners were earning only about 59% of their previous yearly average, which obviously must hurt revenue, must hurt operations. And if you're a miner potentially just scraping by, it's obviously going to result in you potentially shutting down your machine. So once we actually see some potentially Bitcoin miners coming back into the market, maybe due to higher prices, which we're already starting to see little glimmers of, then potentially new miners come in, we get that hash ribbons buy signal. And once we start getting some more competition, once we see, like we said, retail institutions start to really recognize the new supply and demand economics of the asset, this 1 year transitionary period, which usually we do actually kind of lag behind a little bit. It's mapped out as a 1 year transitionary period. But if we look at something like the 2017 cycle, we actually didn't top out until probably 6 months after it had given us this transitionary period. So currently, as we had the halving event in April, it's giving this transitionary period end in April 2025. But potentially 6 months later than that, we could be looking Q4 2025 before we see a Bitcoin price action peak. But is this model accurate in terms of its price valuations? It's currently predicting about a $450,000 Bitcoin price about a year from now. Now, there has been a few different iterations of the stock to flow model. This is the original, and we can say it has somewhat followed Bitcoin's price action accurately. Is $450,000 reasonable? Even if it isn't reasonable, what we can do is look at maybe our biggest divergence from this fair valuation during a Bitcoin bull cycle. So if we look back here in 2017, we can actually see that the model variance was minus 0.74. This led to a Bitcoin price of $1,911 when it was predicting a value of $4,000. So this was actually about 50% less than was actually predicted by this model. In fact, if we just do the maths here, what we can do is work out exactly how much we were beneath that. So we were 47.49% of the model predicted fair valuation. So even if the stock to flow model doesn't come to fruition in this cycle, if we reach just, like we could see, 47% of what it's predicting a year from now, then we could still see Bitcoin prices of $210,000. So even if the Bitcoin stock to flow model breaks, it definitely is still having some impact. Retail institutions are certainly watching the economics of Bitcoin, maybe not to an exact dollar valuation as this model is predicting, but the supply and demand economics of Bitcoin are definitely undeniable. And even if this model does break, which we're not actually seeing an indication of that yet, even if we see it break to a point where we've seen historically throughout other previous bull cycles, it could still lead to a Bitcoin price peak of over $200,000, over a 3x from where we currently are. So really, it's definitely a metric I'm still going to be watching until we see evidence that this metric maybe isn't worth watching anymore. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, the Bitcoin stock to flow model compares Bitcoin to comparable store of value assets such as gold and silver to try and value and forecast the Bitcoin price action. And by taking into account the circulating supply, the stock, and the inflation rate, the flow of Bitcoin, we can see that the asset has historically followed this fundamental valuation with only minor deviations. And I say minor, obviously $15,000 is quite a deviation, but realistically, over the course of over a decade, it's pretty remarkable how much Bitcoin has closely followed this asset. And even though the stock to flow model has many skeptics, there's no indication that this model is no longer useful. We're at comparable levels to where we were in previous cycles, just post-halving, and until we see evidence on the contrary, we should at least consider that this forecast remains a possibility. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and a whole lot more, all for a fraction of the standard industry price. There's really subscribe. Like, we have so much cool stuff. And to celebrate the launch of Bitcoin Magazine Pro, it doesn't even cost you to subscribe. We're offering a free trial for all new site subscribers to try out all of our advanced features absolutely free of charge. So all our macro suite portfolio tools, max alerts, TradingView indicators, everything on the advanced features list, absolutely free for 30 days. So definitely don't miss out on this limited time opportunity to really get the best of Bitcoin Magazine Pro. And let me know what your thoughts are on potentially following the Bitcoin stock to flow model valuation. Do you think it is going to come to fruition? Do you think it's maybe ran its course and we're not even going to get close to where this model is predicting us to be in just a few months' time? As I said, let me know down in the comments below and on social media. I look forward to reading and replying to every single one of them. Thank you all very much for watching, and I'll see you in the next one.